Yeah, good morning, everyone. So yesterday we saw US market acting positively, uh, whereas the expectations on the duties announcement, only the statement has come, wherein the president has said that they will be working on these duties and reciprocal duties will be imposed. But to find out how much or where the duty need to be imposed, they will be doing their homework, and by April they will be coming up with reciprocal duties on different countries. What we feel that this is more of a negotiation tactic and putting pressures on the different countries for coming forward for negotiations and uh, improving trade with US, which is which we saw that even Indian Prime Minister also traveled to US to come up with better numbers. Even Indian Prime Minister meeting with the US has indicated that they will be increasing trade from around 200 billion to over 500 billion with the US. Specifically, defense and oil and gas procurement will be increased. Apart from that, the US president continued to indicate that India is imposing larger duties, and if the steps will be taken to reciprocate them. So it's more of a pressure tactic which were used by the US on different countries, and that is putting some and that is now the event is over, and the things are now will be happening over a period of time, and how and when that is not known yet. So but we see that even the dollar index came off sharply yesterday, and now it is at around 107.10, which was struggling around 108. So a sharp correction, and that is leading to positive sentiment for emerging market, and most of the Asian markets are trading positive, and even the commodities are also seeing some positive trend, wherein oil is up by around $0.5, uh, copper is up by around 1%, and aluminum is down by around 0.5%, iron ore up by 0.5%, and steel is more of a flattish. So overall seems like more of a positive sentiment day. We had seen Indian market continue to remain under pressure for quite a few days. Yesterday, though, had seen broader market had seen sideway movement, but larger market continue to remain under pressure. So with these events getting over, and quite a few days pressures were there in the market, so quite possible we may see some uh, positive trend in today's trade. And I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. See, yesterday Indian market closed with minimal change and closing our important resistance level above that important resistance level, that is 23,000. Today we expect gap up open and likely to remain positive during the day. Next immediate resistance for index 23,100, and if Nifty break this range first half an hour and trading above the important resistance range, then we expect further up move towards 23,240 and then 22,400 in upside. Downside majorly support place around first is intraday basis 23,000, and below that 22,940 is a major support for index. So today we expect positive momentum in index. Bank Nifty also facing an immediate resistance around 49,770. I Bank Nifty clear this important resistance and close above this important range. Then we expect upside towards 50,000 and then 50,200. Major support place around 49,300 and 49,000 at downside. We expect positive open in both index, and during the day we expect first half an hour if managed to sustain this range, then we expect the further upside momentum. Stock specific, Bajaj Finserv looks positive at current level. Chola Fin also given a good rally yesterday, and weekly chart given a fresh breakout. Do you expect some positive momentum in Chola? In the metal, sale also looks positive at current level. National Aluminum also given a good rally yesterday. Do you expect this rally to be continued? Negative side, Kolpal looks weak at current level. Yesterday we saw some pressure in Kolpal. Aisha Motor also facing an immediate resistance in this range. Do we expect some negative side in Aisha Motor and Kolpa, and positive side in Bajaj Finserv and Chola Finance? That's it for technical derivative guy can carry.
Yeah, thank you. Good morning, everyone. So, on the derivatives front, as we are witnessing, is that in yesterday's session, the liquidation took place on the upside level of 23,200 level, from which we saw that Nifty gave a negative closing. Still, in today's day of trading session, if you look at the overall OI scenario, at 23,200 strike after weekly expiry, we have seen that not a major liquidation took place at 23,300 200 call rate. Once the Nifty managed to get stable about 23,200 level, then we will see the carry forward buying to be witnessed in market towards the 23,500 level. But the positive factor still we are witnessing is that at 23,000 strike for the monthly of a put writer position, still holding position strongly between 22,800 to 23,000 levels. From last 2 weeks of trading session, we have seen that the Nifty managed to show some reversal from the 22,800, due to which the position of put writer are intact. So till the time the liquidation of is not taking place of put writer position, till that point of time we might witness some positive to range one momentum in the market. Currently, as previously also I told that India weeks, till the time it's not going below 13 level, till that point of time we might witness this kind of volatility in the market. Once India weeks settles below 13 level, after that we will see some fresh buying in the market, and carry forward buying will be witnessed. Till that point of time, we will witness this kind of scenario in the market till the time the upside range is not getting broken out. So the upside range for the Nifty as per the OI position, the team tends to be between 23,200 to 23,500 level. Till this point of time, we will see Nifty to remain in 700 points of momentum in coming days of trading session. While the stock specific and sector specific front counter that looks positive is Muthoot Finance, SBI Card and SGBN looks positive. While on the negative front, Nika, PI Industry and KI looks negative. So that's it from Barrett front. Thank you.
Good morning, everyone. On the result front, Lakshmi Dental Limited posted the result. It has seen it has seen improved set of numbers for the quarter. Revenue grew by around 10% on a sequential basis, and on operating level, it has seen consistent improvement, with margins improved by around 30 basis points on a QOQ basis at 15.6%. It has seen healthy double-digit growth across all business segments. The company is listed in the month of January with 30% listing gains. Currently, it is trading at the same level of its issue price of rupees 428 due to impact of volatile market. With strong performance in both top line and margins, as well as healthy return ratios, we had recommended subscribe to the issue, and we continue to remain positive on the company, where the stock is currently trading at a PE of 106 times to 9-month FY25 annualized EPS. We will provide further updates from the con call today. On the chemical side, Deepak Nitrite Limited result was below expectations. Revenue degrew by around 5% on a YY basis. As per the press release, there was a deferred demand as well as planned shutdown that led to volume degrowth. Further, there was a lag in the recovery of agrochemicals intermediates, and high raw material prices and continued oversupply from the China has impacted the overall performance. Operating margins reported at 8.9% versus the expectation of around 15%. The stock is trading at a PE of 29 times to FY26 earnings, and we will provide the updates from the con call. Anupam Rasayan India Limited posted the result above expectations. The top line has grown by around 32-33% on both QOQ and YOY basis. Overall margins have improved to 32% from 26 to 28% of previous range. In the investor presentation, the management has highlighted that pharma and polymer segment has contributed to the performance. Also, Tanfac acquisition has seen significant growth. Both this will enable the further growth, further performance for the strong full year. And in addition, agrochemicals has shown recovery, especially in the European market. The management has indicated 30 to 35% growth in FY26. The stock is trading at a PE of 31 times to FY26 earnings, and we are positive on the stock. Privi Specialty Chemicals had a con call yesterday. On the result front, it has seen the decent performance. There was a planned shutdown on account of enhancing the incremental capacities of flagship products that impacted the revenue growth during the quarter on sequential basis. However, the margins for the quarter had improved at around 23% on account of higher yield, improved process efficiencies, and favorable product mix with healthy contribution from the high margin products. The management expects to maintain the margins in the future. On the Prigiv JV, it has started its commercial production, and it expects a ramp up in production in FY26. Also, in existing product capacities, it is planning for the incremental expansion. For that, it has planned the capex of rupees 200 to 250 crore over the next 15 to 18 months, which will be met through the mix of internal accruals and the debt. For FY26, it has guided for the revenue growth of 20% and volume growth at 15%. This is mainly conviction is there because of the 70% of the business orders are already booked for calendar year 26 with annual contracts. And we have recommended this stock in our monthly recommendation for January at around 1850 levels with a target of rupees 2126. Due to overall correction in the market, we believe the stock is available at an attractive valuation of 27 times of PE to FY26 earnings. And it has seen the decent quarter performance. So we continue to remain positive on the stock and recommend to add the stock at these levels. Thank you.
Good morning. Manappuram Finance Limited posted its results. Results is below expectations. NII came at rupees 1,591 crores versus expectation of 1,631 crores, increasing 9% YOY. Profits came at 282 crores, minus 51% YOY. AUM grew by 9% year on year. The asset quality increased slightly. GNPA came at 2.46% and NNPA came at 2.23%. At the beginning of the quarter, RBI has prohibited the unit from sanctioning and disbursing loans due to excessively high pricing and significant markups over funding costs. This restriction was lifted last month. So the overall outlook is neutral for the stock. The stock is trading at PE of 6.8 times FY26 EPS and 1.3 times trailing price to book value ratio. Thank you.
Good morning. Hindalco Industries Limited posted their results. Result is in line with expectations. Upstream volume came at 338 kiloton versus the expectation of 336 kiloton, which has grown 3% quarter on quarter and 1.5% year on year. Upstream EBITDA per ton came at $1,480, which has increased 9.7% quarter on quarter and 68% year on year. Revenue from operations came at 58,390 crore, which is almost flat quarter on quarter and has grown 10.6% year on year. EBITDA has declined 3.8% quarter on quarter, but has grown 29.3% year on year. EBITDA margin was in line with expectations at 13%, which is lower 0.5% quarter on quarter, and last year it was 11%. Adjusted PAT came in line with expectations. We will provide the outlook and further updates after the con call today. Thank you.
Yeah, that's all from us. I'll request commodity team to take up from there.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, a positive opening in gold, and we are expecting the momentum to continue. So buying on dips around 85 900, 850 is recommended with a stop loss of 85 650. On upside again, 84 86 400 is the level where one can book profits. If prices sustain above 86 400, then we expect further buying. Watch out for the same. In silver also, we are recommending to go long. One can initiate a buy around 96,000, 800 with a stop loss of 95 400. And on upside again, it can test 96 800 to 97,000. Wherein copper also prices have already opened gap up. One can buy on dips around 870 language 870. If prices are sustaining above 870, then we might see fresh buying till 880 885. So buy on dips and maintain a stop loss of 867. Zinc, we are expecting prices to test 271, 272 on upside. So buying around 268 is recommended with a stop loss of 266. Wherein crude oil, we are expecting prices to test 62, 70, 6300. So buying on dips around 6170 with a strict stop loss of 6100 is recommended. And in natural gas, one can see a consolidation from 330 to 310. So for trading purpose, one can sell around 320 with a stop loss of 330. And again on downside 310, one can enter long with a stop loss of 302. So that's it from us. Thank you very much.